Financial markets are correcting very dramatically since the start of the year. Mortgage rates are at their highest in 2 years, since before the pandemic. The stock market is off 10% since just the start of January. Crypto markets are cratering too. Bitcoin is off 25 to 30% in that time. These market changes impact the wealth and the optimism of home buyers, but how quickly do they impact the actual home buying decisions? That's what we're watching for in the data. Each week, Altos Research tracks every home for sale in the country, all the pricing, all the supply and demand. We analyze all those changes and we make it available to you before you see it in the traditional data channels. Traditional real estate data is released monthly, so by the time it gets to you, it's kind of old news. So the news right now is that it's a hot market already for the spring, and there are some economic risks like rising rates, inflation, volatile financial markets. They have not yet derailed that eager buyer activity. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what the data is telling us right now. The short answer is that it's way too soon to see financial market volatility corrections impact the real estate data. If you're buying this spring, you probably started selling other financial assets last fall to raise the cash to be ready to buy. That means you actually sold at the top of the market. And so if market volatility is worrying you about the housing market, one thing to keep in mind is that home buying is much more driven by life events than it is by financial events. We get married, we buy a house. We have kids, we upsize a house. We get divorced, we sell a house. We make a lot of money in crypto. We think about buying a bigger house when we get married. So first-time home buyers, especially those who haven't accumulated big financial portfolios yet, they're significantly less impacted by markets volatility. One scenario this year is that rising rates and stock market fluctuations cool demand for second home buyers, which actually leaves more room for the first-time buyers. These folks who have been battling so hard in the competitive markets over the last couple of years. So maybe big stock market swings create better opportunity for first-time buyers. These life events are really captured in the big demographic trends that we've been talking about for a long time here. The millennials are ready to buy homes. That doesn't change when Bitcoin tanks by 30%. So that all being said, here's the data right now. Available inventory of unsold single-family homes continues to drop like a rock. We are down to only 277,000 single-family homes active on the market right now. That's down 2.4% from last week, and it's a new record low, of course. There are no signs of inventory bottoming in the next few weeks. It's looking more and more like April again before available inventory starts to climb. We'll see if that forecast changes. If you're concerned about how rising rates may impact the housing market, I'm getting a lot of questions on that. This is the primary chart to keep your eyes on. We know that rates rose in 2018 from like 3.9 to 4.9% by December that year. The notable increase in rates slowed demand and let inventory build up a little bit. We started 2019 with more inventory than the previous year. Not a ton more, but a little more, a few percent more. So we can use 2018 as a guideline for what might happen this year if rising rates are able to cool the frenzy just a touch. Frankly, rising inventory would be welcome. There are no signs of it yet. As I said, it's too early. In fact, rising rates will first increase demand, with the psychology being we need to get in before costs rise too much. So it pulls demand forward. You can also see this unabated demand in our immediate sales tracker, the percentage of the new listings that are going into contract within hours or a couple of days of listings is climbing now in January. It's increasing. So it's still early spring market yet, but buyers are ready. They're pouncing on anything that becomes available. 32% of the new listings this week went into contract immediately, nationwide. This is where you know the multiple offers, the bidding wars are escalating. Each bar in this chart here is a week. The light colored portion are the immediate sales. The dark red portion are the new listings that didn't get sold immediately. Maybe they're taking a week or two. You can see the January volume picking up, and the portion of the light red line is increasing every week. What's interesting about these immediate sales is that these properties are both new listings and new sales in the same week, or newly pending. So they're not actually closed sales yet, but the contract is pending. So this is how we look at that same data in the context of the new pendings each week. There are 80,000 or so homes. We saw this set this week. 25 of them were brand new on the market. You can see 4 years of cycle here. The big dip for the first few weeks of the pandemic is in here in 2020. And then last year is how the immediate sales began to be such a dominant force. We started tracking the immediate sales last year. And that brings us to prices. The median price of a single family home this week rose 1.25% to $375,000. The market is moving very quickly. Peak pricing usually hits in June, so we have several more months of rising prices to process into the market. I'm going to be fascinated to see which week median home prices climb past $400,000. That was our threshold last year. We never beat $399. In 2017, you can see earlier in this chart here, home prices spent the whole summer plateaued right at $300,000. Each big round number is a psychological barrier for buyers. So if you've been watching these videos the last few weeks, you'll know that the price metric I like to watch in January is the price of the new listings. That's the light red line here. Each week, the set of homes that get listed for sale that week is what we're looking at. And it always prices always spike in the first quarter. The steepness of that spike tells us about the price appreciation really for the whole year ahead. What we can see now is that the price of the new listings in 2022 is spiking more steeply even than last year. The price of new listings is up 2.8% this week to $365,000. Usually in January, there's still a big gap between the new listings hitting the market and the stuff that's already been listed. Usually that gap closes by March when the best of the new year's inventory hits the market. You can see at the right end of this chart here that the gap is very tiny for this year. The light red line has already closed the gap with the dark red line. Because these are sellers who know the bidding wars and the immediate sales happening all around them, this price of the new listings shows us that they are aware of incredibly strong demand there, and it's a very bullish leading indicator for home prices for all of 2022. So the last one to look at today are the percent of homes on the market with price increases. We've talked a little bit about this in recent weeks. Not surprising given the other data points that we've already covered. The number of homes that we saw last fall at a lower price and are now on the market at a higher price increases. This group is big and keeps climbing. Currently, 6.1% of the market is on with price increases. The percentage is higher in the Sun Belt investor markets. Last year, price increases peaked in mid-March. We're slightly less frenzied now. And there are these other financial market risks, which makes me feel like maybe the price increases will be a little tempered and hopefully peak sooner than March. But right now, the percent of homes with price increases is yet another signal that the home buyer sharks are circling and they're very hungry. Okay, that's all the data we have time for this week. People often ask, Mike, can I get the local data for my buyers and sellers right now? You know what? We work with a lot of real estate professionals. And so you watch these videos and you want to know, how do I do this for my local market? Well, the answer is yes. To get your local data for your buyers and sellers, you go to altosresearch.com and join us. You can get your data into your clients' hands today. So because everybody needs to know what's happening in this crazy market, it's your opportunity to help them succeed. Also, this week, a new Top of Mind podcast episode will be available Wednesday. Subscribe to the Altos YouTube channel to not miss any of the data changes in the market. We also share our podcast there. So much great stuff for you. I appreciate you being with us. More next week.